Hey guys, welcome to another episode of 10-Minute Trades. Today we're going to be taking a look at a pretty popular ticker among the younger generation, and that is DraftKings. If you're not familiar with DraftKings, they're very similar to Penn National Gaming, which I did a 10-minute analysis on and an update video recently. But they're very similar in that they're basically an online sports betting or sports gambling website. So let's get right into it because it's a very interesting graph. This ticker has not been publicly traded for that long, so there's not a lot of historical data here. Looking at the one-day graph here, you can see each candle here represents one trading day. A lot of bullish momentum ever since early this year. Ever since about April, this ticker has really taken off. Back in April, it was trading for around $12 or so. We closed today at around $63, $64. So basically has almost 5 times the price in the matter of a few months. So absolutely crazy momentum right now on DraftKings. So let's get right into it. Longtime viewers know the first thing I like to do is look at the Fibonacci retracement levels. And it was difficult for me to decide where do I want to start these Fib levels and where do I want to end them, because we recently just set all-time highs. We've been basically setting all-time highs every day for the past 5 trading days. So I thought the best way to do this was do the recent lows, which were back on July 14th intraday at around $27 and some change. And then I drew it to today's highs intraday around $64. So that left us with something that looks like this. And I thought this was the best representation. This 23.6% Fibonacci level looks like it is acting as an area of support right now for the past 3 trading days, because you can see back on September 29th, we bounced right off it. We were not able to break it even though we had a red day. And then also back on September 18th, it wasn't able to break above that. The next few trading days after that, also the wicks did not really get that high. So it does look like this is a fairly accurate representation of support and resistance levels based on Fibonacci retracements. So I'm going to stick with this. And let's get right to work. The next thing I like to do is identify areas of support and resistance. So let's get to work here. The first line identified was here at about $38 and some change. You can see there was some resistance here earlier this month, back in early September and end of August. And then also back in end to middle of July, you can see a bunch of candles and wicks tried to break above $38. Were not able to do it, actually traded below it for quite some time until really September 9th is when we really were able to break above it. And look at this movement. From September 9th, we were at roughly $40, let's just say. And now we're trading almost $20 higher in basically one trading month. Absolutely crazy momentum right now. So let's keep moving here, identifying other areas of support and resistance. So then I saw this area of resistance right now at $32. You can see again back in early August and also back in early July, a bunch of times these wicks and candles bounced off the $32 price level. We're not able to break below it. We did break below it back in middle of July, but promptly came back up. So that looks like an area of support as well right now. But we've got some ways to go because, like I said, we're trading up in the low 60s right now. So let's keep working. This area here at about $44, I'm a little bit iffy on, but I think it's going to hold up because you can see recently, September 10th, September 11th, these intraday wicks basically bounced right off this $43, $44 price level. But if we zoom out here and go back in time, you can see back in early June and also end of June, there were a couple of times where these wicks or candles basically again tried to get past $44. They were not able to do so and promptly bounced off below it. So I think that is a very good area of support right now. But again, that's $20 away from where we're trading at currently. So let's keep working. I think the current area of support right now is going to be basically right here at this 23.6% Fibonacci level. But even if that wasn't there, I still think this is an area of support at about $55.50. And I said that because if you look here on September 28th and 29th, we bounced right off it in terms of the candles. On September 18th, this candle was not able to break above it. The next few trading days, again, these wicks got awfully close to that price level until we finally gapped up essentially from September 25th to September 28th. So I do think our closest area of support right now is $55, which is actually a little bit concerning considering we're trading about $7 to $8 above that right now. So let's see. I think the last area of support that I've identified is around $49, but this is the one I am least sure about because if I zoom out, there is no price data. There is no price data between about $43, $44 and $55. So I think this is going to be an area of support because you can see this candle here, this wick here, and then this wick right here back in early September. We're bouncing off first as an area of resistance, and then once we broke above it, it was acting as support. So I do think $49 is an area of support, but right now, until it really proves itself, I would call it a weaker area of support because there's not a lot of price data there. And that is a little bit concerning because this is a little bit of a no man's land if $49 is not a true area of support. Because from 55 to about 44, there's an $11 gap here where there's not a lot of price action to go off of. But that being said, I think that this will hold up as an area of support if we need it, but only time will tell. Now, the other thing now was identifying a trend line. I mean, yes, it's up. The overall trend is up and to the right, which is what you want to see. But I was trying to identify a trend line to see where is the price action and what kind of line is it trading against. First off, we can see this orange line here represents the 21-day moving average. If I zoom in here, the pink line here represents the 50-day moving average. We are trading well above both of those moving averages, which is a little bit concerning because if we look back in time here, you can see, especially from about, let's say, late June to about September, for a few months, we were kind of trading really closely to the 21 and 50-day moving averages. You can see they were kind of coiling here, kind of crisscrossing one another until finally the 21-day MA really broke up off the 50-day moving average. And that's really because this huge and strong price action, this huge bullish movement the past trading month. Now, I say that I'm concerned because right now I wasn't able to identify a true trend line because no matter which way I drew a trend line, let's just say I drew something like this, well, that's too shallow, right? Let's say I changed that and made it more steep and did something like this. Well, that's great. I mean, that's probably the accurate for the last month of trading, but it doesn't really take into account the prior 2 months of trading. So it was really hard to identify one trend line. And that's really because it hasn't really been trading linearly. I mean, this graph has pretty much gone parabolic. I mean, the trend line is basically something like this, right? It's a curve. It's not a line, which makes it hard to analyze. So it's not really a trend line. This graph basically went parabolic. So I said, okay, well, let me try to identify a parallel channel, not trying to take into account all of the data or as much of the data as I can recently. I'll just look at basically the last month of trading. So I came up with this, and I think this fits the data pretty well right now because if I look here, you can see that the price has been trading in this channel for quite some time. If I get rid of this brush here, you can see, we've been trading in this channel ever since about September 2nd to now. And so it does fit the price action, does fit the data. So I do like this right now as an accurate representation of the stock. But there's a couple of things that concern me. And my hypothesis is that we are going to see a pretty decent pullback on DraftKings in the next few trading days. And a couple reasons I say that. I've already touched on one. And like I said, it's really trading high above the 21 and 50-day moving averages, which it doesn't really like to do looking at the past data. So I think we are due for a pullback closer to the 21 and 50-day moving averages. So that's one point. The second point is if we take a look at the RSI, ever since about mid-September, we've been in the very rather overbought category. So again, looking at the RSI, that tells me we're a little bit close or we are overbought. So that also supports a little bit of a pullback here. Now, the other thing is, like I said, the closest area of support that I could identify was $55. We closed about $7 or $8 above that at the end of the trading day today. So again, I think we are going to get a bit of a pullback, probably close to $55. If we go to the bottom of this channel, the next few trading days, that's going to be somewhere around $57, $58, $59, depending on how long it takes to get there. So I do think we're going to trade sub $60 in the next few trading days. So if you're looking to swing trade, buy shares, personally, again, this is not financial advice. This is just my opinion based on my technical analysis. I would wait because I think you're going to get a better price for your shares in the next coming trading days off a little bit of a pullback here. If you're looking at trading options, if I were to trade this, and let's say I wanted to wheel this stock and trade cash secured puts initially, I would want to sell some cash secured puts below at least $55. Because like I said, I hope 55 holds up as an area of support and anything below that won't get tested easily. So if I was going to sell cash secured puts to have a bullish play on this, I would want to sell them at least below $55 in my opinion. Now, if you're selling covered calls, it might be a good idea to sell covered calls sooner rather than later if my hypothesis holds up and that we are going to be due for a pullback, because then you can get good premium on your covered calls, and then if we do pull back, you can close them out for some quick gains if you want, or ride them to max profit hopefully, and still own shares of stock. Or if you don't own shares and have naked calls, more power to you, but same concept applies. So that's really my 10-minute technical analysis on DraftKings. Not a lot of gaps to fill. Actually, I don't see any gaps to fill, but very strong momentum. I mean, in the past few trading months, this stock has basically gone parabolic. So very strong movements. But I always get concerned because I feel like stocks that just kind of go up very quickly are also at some point, there's going to be a little bit of a rug pull or a rug tug, and people might end up holding bags if they're not careful with this ticker. So that's my 10-minute trade analysis. Let me know in the comments below if you agree or disagree. Let me know if you've traded options or if you hold shares of DraftKings and how they've been working out for you. Let me know what ticker you want me to analyze next. And as always, happy trading.